Hey guys, it's me. What is going on? And welcome back to another episode of Crypto Exchanges 101. We break down all things crypto exchanges. If you're interested in learning about anything regarding crypto exchanges or where to buy, sell, trade your cryptocurrency, then this is the channel for you. Make sure you hit that subscribe button. In today's episode, we are covering everything from centralized exchanges to decentralized exchanges, looking at some of the different platforms out there, answering the questions that you guys have been asking us in our community, and also what you should be aware of when choosing an exchange. So let's get right into it. First things first, what is a crypto exchange? A crypto exchange is simply a place where you can buy, sell, and trade cryptocurrency. Now, it's really important that you understand the difference between a centralized exchange and a decentralized exchange. So let me explain. A centralized exchange is pretty much run by a company. It's a company who decides what assets are listed, what fees are like, what services they offer, and so forth. Think of Coinbase or Binance. They are both centralized exchanges. The upside to using these kind of exchanges is that they are very easy to use, usually have high liquidity, which means you will get good prices when trading. They also have lots of assets available and usually have a wide range of different service offerings, including margin trading, OTC lending, futures, etc. The downside to these kind of exchanges is that you have to trust them with your money. There have been many hacks in the past where centralized exchanges have lost customers' funds due to vulnerabilities within their platform, so it is something that you have to be aware of. The other option you have is a decentralized exchange. So a decentralized exchange is exactly what it sounds like. It's a decentralized exchange. There is no middleman. You connect your wallet directly to the decentralized exchange and you trade peer to peer. You can think of platforms such as Uniswap or PancakeSwap. These are decentralized exchanges. Now, the upsides to these kind of exchanges are that you have max privacy. Nobody knows who you are, and you also have full control of your keys. That means nobody can access your account unless you give them your private keys. The downside to these kind of exchanges are that usually the liquidity is quite low, so you may not be able to get the best prices, and you also have to be aware of the fact that you are responsible for your own security. So if you do get hacked or lose your keys, there is no one to call and ask for help, so that's something to be aware of. Now, once you've decided whether you want to go with a centralized or decentralized exchange, it's time to look at some of the most popular exchanges out there. So let's start off with the basics. How do you even get started on an exchange? Well, let me show you. Step 1. Sign up for the exchange. Most exchanges will require you to do KYC or AML checks. What this means is that you have to verify your identity to make sure you are not a robot but rather a human being and that you are not trying to commit any kind of fraud. Step 2 is to navigate the interface. Most exchanges will have three main sections. The first section will be spot. This is where you can buy and sell cryptocurrency at the current market price. Next section is margin. This is where you can leverage trade. So you can use margin to buy more than you have. Think of it like using a credit card. You can buy way more than you have, but you also need to be aware that the risk is higher because you can lose more money than you put in. Then the final option you have is futures. Futures are similar to margin trading, but they are a bit more advanced. They also carry a higher risk and are not suitable for everyone. Now, step 3 is understanding the order types. Most exchanges will have three main types of orders. The first one is called a market order. A market order is where you buy or sell at the current market price. It's the easiest type of order to execute and it's the fastest. The next order type is called a limit order. A limit order is where you set your price and you wait for the market to come to you. For example, let's say Bitcoin is trading at $40,000 and you think it's a little too high. Once you understand how to place orders, it's time to learn about trading. The first thing you should always look at is the order book. The order book shows you the real-time demand and supply for a particular asset. So if there is more sell orders than buy orders, it's likely the price will go down. If there is more buy orders than sell orders, it's likely the price will go up. The next thing you should look at is candlesticks. Candlesticks are just a fancy way of saying charts. Green candle means the price has gone up. Red candle means the price has gone down. The next thing you should look at is tools. Most exchanges will have technical analysis tools built into their platform. Some of the most popular tools are RSI and MACD. I won't go into detail about these tools, but if you want to learn more about them, check out some of our previous videos. Finally, you need to be aware of fees. Fees will eat into your profits, so it's important that you compare them before trading. As I mentioned earlier, some exchanges will also offer margin, futures, and lending. I won't go into detail about these products, but again, if you are interested in learning more about them, check out some of our previous videos. Next up, we're going to talk about security. I cannot stress enough how important security is, so please listen up. There are 3 things that you absolutely must do when trading on an exchange. The first thing you need to do is enable 2FA. 2FA stands for two-factor authentication. Two-factor authentication is where you add an extra layer of security to your account. Most exchanges support 2FA via authenticator apps such as Google Authenticator or Authy. The second thing you need to do is use a hardware wallet. Never keep your coins on the exchange. Always transfer them to a cold wallet. Cold wallets are offline wallets that are super secure. Some of the most popular cold wallets are Ledger and Trezor. The third thing you need to do is never ever ever share your keys. Keys are like passwords. If you share them, you're giving someone access to your account. Oh, and one more thing, beware of phishing. Phishing is where scammers try and trick you into giving them your information. They usually send you a message or email pretending to be someone else. Don't fall for it. Hot wallets and cold wallets are the next thing we're going to talk about. So let's start off with hot wallets. Hot wallets are wallets that are connected to the internet. So these wallets are convenient because you can access them anywhere, anytime. However, they are less secure because they are connected to the internet. The biggest risk to hot wallets is hacking. If a hacker breaks into the exchange, they will be able to steal your coins. That's why it's important to choose a reputable exchange with strong security measures in place. On the other hand, cold wallets are wallets that are not connected to the internet, so these wallets are much more secure because they are offline. However, they are not as convenient because you have to plug them in every time you want to use them. Cold wallets can be in the form of hardware wallets or paper wallets. Hardware wallets are physical devices that store your keys. Paper wallets are just pieces of paper with your keys written on them. The next thing we're going to talk about is decentralized exchanges. We already touched upon this earlier, but let me dive a little bit deeper. The first question you guys asked us is, why should I use a decentralized exchange? Now, there are 3 main reasons why you should use a decentralized exchange. The first reason is that you have total control of your funds. On a centralized exchange, you trust them with your money. On a decentralized exchange, you have full control of your money. The second reason is that you can trade anonymously. On a centralized exchange. You have to provide your information. On a decentralized exchange, you don't have to provide any information. The third reason is that you can trade new tokens early. Many new tokens are only available on decentralized exchanges. The reason why is because decentralized exchanges have lower barriers to entry. Anyone can list their token on a decentralized exchange. The downside to decentralized exchanges is that usually the liquidity is quite low. This means that you may not be able to get the best prices. Also, you have to be your own security. If you get hacked or lose your keys, there is no one to call and ask for help. The next question you guys asked us is, what are some popular decentralized exchanges? Now, there are many decentralized exchanges out there, but the most popular ones are Uniswap and SushiSwap. Both of these decentralized exchanges are based on Ethereum. The next question you guys asked us is, what is an altcoin? An altcoin is just a fancy word for any coin that is not Bitcoin. The next question you guys asked us is, what is a stablecoin? A stablecoin is a cryptocurrency that is pegged to a stable asset. Most stable coins are pegged to the US dollar. The most popular stable coin is USD. The next question you guys asked us is, what is staking? Staking is where you lend your coins to a protocol and earn interest. The amount of interest you earn depends on the protocol and the coins you are staking. Some protocols pay very high interest rates, while others pay very low interest rates. The next question you guys asked us is, what is a tax form? A tax form is a document that shows all of your trades for the year. Crypto is treated as a property for tax purposes. This means that you have to pay capital gains tax on your profits. The IRS considers cryptocurrency to be property for tax purposes. This means that you have to pay capital gains tax on your profits. The IRS considers cryptocurrency to be property for tax purposes. This means that you have to pay capital gains tax on your profits. The next question you guys ask us is, how do I stay up to date? There are a few ways to stay up to date. The first way is to follow the news. There are many crypto news outlets out there. Some of the most popular ones are CoinDesk and Cointelegraph. The next way to stay up to date is to follow crypto Twitter. Many crypto influencers and experts share their thoughts and insights on Twitter. The last way to stay up to date is to join a community. Our community is a great place to meet other crypto enthusiasts and learn about new trends. Finally, I am going to leave you with a checklist of things to avoid when choosing an exchange and also things to avoid when trading. Let me go through the checklist and then we'll finish off. So the first thing you guys should never do is trade with emotion. Don't be greedy. Don't panic sell. If you do, you will likely make the wrong decision. The next thing you guys should never do is skip the security steps. Always enable 2FA. Always use a hardware wallet and never share your keys. The third thing you guys should never do is invest more than you can afford to lose. Crypto is a high risk, high reward investment. Only invest what you can afford to lose. On the other hand, the first thing you guys should always do is diversify. Don't put all of your eggs in one basket. The more baskets you have, the more resilient you will be. The next thing you guys should always do is use a demo account. Many exchanges offer demo accounts. Use them to practice trading. The final thing you guys should always do is learn. Crypto is constantly evolving. The more you know, the better off you will be. That's all I have for you today, guys. Thank you so much for watching. I hope you enjoyed it. If you did, make sure you hit that subscribe button. Also, feel free to join our community. We have a lot of cool stuff planned for the rest of the year, so make sure you stay tuned. That's all I have for you today, guys. Thank you so much for watching. I hope you enjoyed it. If you did, make sure you hit that subscribe button. Also, feel free to join our community. We have a lot of cool stuff planned for the rest of the year, so make sure